Thanks, Andrew, and thanks everyone for attending. So Newcore Gold, we're TSX listed. We also trade on the OTC. We're in Ghana, as Andrew highlighted. We're advancing the Enchi project. It's a district-scale exploration project that's fundamentally underpinned by very robust economics that we outlined in a 2024 PEA, which we're now in the process of de-risking towards a PFS, which we will commission in the second half of this year and look to publish in the first half of next year. First thing I'll highlight is that I will be making some forward-looking statements, so I encourage you to go have a look at that on our website. In terms of Newcore, a few key things I'll highlight. Management and board, we are truly aligned with shareholders through our 15% ownership in the business. This is stock that we've bought alongside investors investing in the company over the last number of years. We are, as I mentioned, advancing a PEA to a PFS. We think that will create a significant re-rating opportunity for investors. And I'll kick things off in this presentation by talking about the 35,000 meter drill program that we're in the midst of and the value that we think that will ultimately create for shareholders. Firstly, though, I'll start with Ghana. It is Africa's largest gold producer, sixth largest gold producer globally. So with that, you get a very supportive government. It's important for the economy. It's important for the tax base. But for us at Newcore, it also means there's a huge amount of skilled labor in country for us to leverage off of. But what I always tell investors, at the end of the day, don't listen to me, single asset, 100% biased CEO, but look at what the major gold companies are doing in country. We currently have 4 of the top 10 largest gold producers with significant operations. Newmont, Anglo, Goldfields. Zijin has just come into the country and paid $1 billion for Newmont's second non-core asset, the Achim asset in country. Newmont is then investing an additional $1 billion into their Ahafo project, which will make Ghana their second largest producing region globally. So great to have these large companies in country and so keen on it as a mining destination. One of the key reasons why we have so many mining major companies in country is because of the prolific geology that we've got. What we're looking at here is a subset or an excerpt of the southwestern corner of Ghana. We have 2 major gold belts that run through Ghana, the Ashanti Belt and the Sefwi-Bibiani Belt. Some of the largest deposits globally discovered here, including Obuasi at 66 million ounces, Tarkwa at 25 million ounces. We're then sitting again on the Sefwi-Bibiani Belt. Great neighbors along trend from us, including Asante with their Chirano and Bibiani mines. Those have historical endowments of 6.5, 5.5 million ounces. And here's that Newmont mine sitting at 20 million ounces and growing, where they're investing an additional $1 billion. On the other side of the border, we've got Taraco sitting in Côte d'Ivoire with the Afema project sitting at 3.6 million ounces. Our project, it's a very large project, 248 square kilometers in size. You would not be able to replicate this today. We've identified 25 targets to date, of which we've only drilled on 9 of them. In terms of the current exploration work that we're doing, we are in the midst of a 35,000 meter drill program. This is focused on 2 key things. One is resource expansion as well as conversion. To date, we've released 25,000 meters of drill results over roughly 200, or actually over exactly 207 holes. A big part of this, which I'll call phase 1 drilling, was focused on resource conversion. So one of the key elements for us to take this project from PEA to PFS is converting ounces from the inferred to the indicated category. So that's been a focus for us. And then the phase 2, which I'll talk about, is really focused on, resource expansion, going back to previously drill tested areas, as well as drilling deeper on the project, which is something we're very excited about. In terms of some of the results that we've had so far as part of this 25,000 meter program, they do include the best grade meter intercept we've ever had on the project, 204 grams over a meter. Last week, we put out our third best ever grade meter intercept, 184 grams over a meter, as well as some nice high grade wide intercepts. Here you can see 37 grams over 2 meters, 7.8 grams over 11 meters. So we're seeing high grades spread across our project. And again, as part of this phase 2 drilling, we're excited to have some diamond rigs on site and looking to start targeting some of this. As I mentioned, big part of the program has been focused on infill, so drilling within the pits to convert ounces. Here you can see in this hole 352, 2.25 grams over 56 meters, so well above the average grade. So we're expecting good results from the conversion drilling that we've been doing. One of the other key things that I'll highlight is the ability for us to potentially expand our resource as part of this infill program. What you're looking at here is the pits that ultimately constrain our current resource today. So infill, again, is a big part of the focus of that drilling. But beyond that, we've pushed a number of these holes well beyond the existing pits that constrain our resource. And the impact that we think that could have is to ultimately grow the overall size of the resource. Here in this hole 288, we intercepted 2.2 grams over, or I guess ended in 2.2 grams over 28 meters. Similarly here in hole 294 and 295, ended in 2 grams over 11 meters, 1.25 over 24 meters. When I take you into the 3D model, you'll really start to see the potential positive impact that pushing these holes deeper and wider could potentially have. Those holes that I was referring to are sitting here at our Boeing deposit, which is our second largest deposit on the project. When I take you in here, and again, we look at those holes number 288, 295, 294, 296. Here are those pits that are constraining our current resource. As you can see, we've intercepted mineralization below and outside of these existing pits. What the potential impact is that we could deepen and widen the overall pits, adding mineral resource to the overall resource that we've got today. So infill was the key focus, but we think there's a real potential to expand ounces as well. Similarly, if we look down here, you can see same kind of impact. All of these holes intercepting mineralization well outside of the existing pits, which we hope will add ounces as we look to update our resource later this year. The other thing that we're extremely excited about, and something we haven't done in the last couple of years, is start to test or continue to test the opportunity at depth. As I highlighted with some of those intercepts there, or those cross sections, we have encountered a lot of high-grade mineralization across our project. What we're looking at here is a long section of our Enchi project, and we're comparing that to the Chirano mine. This would look very similar at Bibiani. It would look similar at Newmont's Ahafo mine. What we've done is we've superimposed the average vertical depth of our pits that constrain our resource today, which is down to roughly 80 meters. So that 80 meters constrains our mineral resource today. What you can see is that a number of these deposits, where they really grow in size and increase in grade, is as you start to identify these high-grade feeder zones. Aquaba, for example, their high-grade, discovery hole was roughly 15 grams over 15 meters. We've started to put some deeper holes into our project, and we've started to have some very good success, and we're excited to have the diamond rig back on site doing some drilling as we speak. Looking here at our Nyam deposit, We've historically put about 15 holes into this area and started to see some very good results. As you can see here, 5.8 grams over 7 meters, 5.6 over 8, 5.4 over 9, 6 over 4. So we think we've tapped into one of these high-grade feeder zones that we ultimately see at a number of these other greenstone-hosted deposits, and our expectation is it will continue at depth and along strike. Our job is to get back in and ultimately continue to test this with the goal of growing the overall size of the resource. For context, again, these are the pits that constrain our resource today, which are only down to roughly 80 meters. And at the bottom of these intercepts here, we're looking at about 250 meters. So globally relatively shallow, but for us, these are some of the deepest holes we've drilled. Looking now at Boyne, here's another area. This is our second largest deposit. What you're looking at is probably about a 4-kilometer strike length, maybe 5-kilometer strike length along here. Historically, we've only put about 15 deeper holes into this area, but we've already started to see where a number of these high-grade feeder zones potentially exist at Boyne as well. So we've got about 10 holes planned here at Boyne, again, to continue to test this high-grade opportunity that we see along this Bibiani belt. So continuing to drill is a big focus for us in the second half of this year, getting drill results out. From a de-risking perspective, to move it from PEA to PFS, we're also doing hydrological drilling, geotech drilling. We're doing additional environmental and baseline work on the project to move our PEA to a PFS and look to get that published in the first half of next year. So arguably, all of that exploration that I've talked about, I would say you get for free today, because there's a fundamental underpinning of value that we put out in our 2024 PEA. What we outlined was a very simple open pit heap leach operation. At a $3,000 gold price, you're looking at an after-tax NPV of 971, after-tax IRR of 136%. The cash flow generated from this project, again, at a $2,350 gold price, you're looking at $855 million of after-tax cash flow. At a $3,000 gold price, you're looking at $1.3 billion of after-tax cash flow. So again, lots of cash flow generated that fundamentally underpins the valuation of Newcore today. One really simple way of looking at it is, if you look at our 2024 PEA, we used an 1850 base case. That produced an after-tax NPV of $371 million. Leverage to the gold price, for every $100 move in the gold price, we're adding roughly after-tax US $50 million to the NPV of the project. So we're adding roughly half of the market cap of the company today for every $100 move in the gold price. And you can see for yourself what the impact of that is from an NPV perspective, 970 to a $1.2 billion after-tax NPV. So the optionality that Newcore provides for shareholders, it's something that gets me really excited. A fundamental underpinning of value that as we move it from PEA to PFS, we think will create a major re-rate for shareholders. And then beyond that, all of that exploration drilling that I spent 80% of the presentation talking about, I would argue you get for free today. And with any drill hole, with success, we could significantly re-rate the company beyond the fundamental re-rate of taking it from PEA to PFS. With that, I think I'll just leave it in terms of capital structure. 250 million shares outstanding. We're well cashed up with $10 million in the bank. We do have an additional $3.5 million coming in from warrants between now and September 26th, so in the next couple of weeks. And then last thing I'll leave you with is we've got very strong institutional support, 55% institutionally owned today. I'll challenge you to find another company of our size with an institutional shareholder list like that one. And what they love is that optionality that I've talked about.
Well, thank you very much. You have perfect timing.